Ladies and gentlemen, good morning, good afternoon, good evening. Welcome to the Tax Headquarter. My name is Washira Joseph. I'm a tax consultant working with ClearTax Consultancy, a firm that is specialized in offering tax consulting services. If you're in need of a tax consultant, do care to talk to me at the end of this video. Now, today I want us to look at the taxation of professionals and consultants and trainers and all providers of specialized services. And we'll be looking at this special category of people. We'll be looking at the 5% withholding tax, what that is all about and what it means, and if it's a final tax. And then we'll be looking at, because these are business people, how do we arrive at their profits and how do we tax these profits? What expenses are permitted legally? What expenses are not permitted for tax purposes? And at the end of the day, I'll be showing you what expenses you can deduct to maximize on your tax deductions, and at the end of the day, to help you be able to pay the least taxes the legal way. Hope you enjoy. Shall we begin? Okay, taxation of consultants, professionals, and trainers. Now, professionals and consultants and trainers, they provide services, and these services are consumed by different entities, be they business or just private individuals. Now, these services can be categorized into either management services, professional services, trainings, or just consulting services. Now, why is this the taxation of this category of taxpayers special, and why did I dedicate a whole tutorial to them? Now, these professionals, they're subjected to a withholding tax at a rate of 5%, and this category of tax, which is specially designed for them, has been a thorn in their flesh. They've been wondering, what is this 5% all about? Your client has paid you, they have withheld 5%, or you realize that you've been paid, your payment is short of 5%, and you wonder, what is it all about? You ask your client, and they say, okay, we pay that to KRA. And you can consider a withholding tax as a deposit to KRA. All right, it's not actually a tax, but it's like a credit. It's a prepayment that has been made to KRA by your client on your behalf, and they are telling KRA, this guy, we paid them XYZ and we deducted 5% of that, and here it is. Now, the proof that your client has not eaten that money and they have actually submitted that money to KRA is through what we call a withholding certificate. All right, so when they file that payment with KRA, KRA is going to send you directly a withholding certificate to your email, or maybe you can just ask your client to issue with a withholding certificate to prove that actually they submitted that money to KRA. Now, one thing that I want you to know is that that 5% payment is not a final tax. It's not the actual amount of tax that you're supposed to pay. All right, so at the end of the year, you're supposed to compute, these were my payments, or these were my incomes, these were my expenses, this is the tax that I'm supposed to pay, and then you less all the withholding taxes that have been made, because this is just but a deposit or a credit. Got it? Now, very nice. Now, for you to prepare your taxes as a consultant, you need to appreciate and have in mind that you are a business person. You are in business of consulting, of training, of offering professional services, and so on and so forth. And as a business person, you have expenses that you incur in the course of doing business. And now these expenses, you're supposed to deduct them from your consulting or your gross professional income. All right. And so to do that, you need to prepare two important statements, and that is a profit and loss statement and a balance sheet. Why are they so important? I mean, you say that you incurred or you charge a depreciation on your furnitures, a depreciation on your computers, you know. So we need to see that that computer actually exists in your balance sheet. You say that there's a loan that you're financing, and so you're charging interest expense to your profits. So we need to see that loan in your balance sheet. So these two documents, P&L and the balance sheet, are very important, and you need to have them prepared, or you need to consult an accountant to help you prepare these so that you can be able to determine what is your profits, and then you can charge a tax on that profit. Now, how does a profit statement look like? And here it is. You can look at these on the report. For the sake of the balance sheet, this is how it looks like. You know, a summary of your assets and liabilities and the owner's capital or the owner's equity. Now, I want to take you through a series of expenses that you can deduct from your gross consulting income. And these expenses are the ones that are allowed. I know the list is endless, but I've been able to sort them through and give you what is relevant to you as a consultant or a professional. Okay? And these expenses, number one, and not in any order, is a contract of labor. Now, if you contract different people or you hire people once in a while to do certain tasks for you, you can be able to deduct the fees that you pay them. All right. Second, if you incur travel expenses, all right, you want to go see your client, do certain work, maybe you're going for a field assignment. So all those travel expenses, all right, you're supposed to deduct them from your consulting income. Now, if you have employees and you are giving them benefits, like you're giving them health coverages, you're paying for the education, life insurance, whatever. So employee benefits is also an expense that you can deduct, and it is allowed. Now, if you have reimbursements, maybe you send people to perform certain tasks and then they bring the receipts and then you reimburse them the money. So that is a business expense, and you can deduct it from your profits or from your income. Now, the next one is vehicle servicing or vehicle expenses. You have a vehicle that you use specifically for your business. Now, note that you can be having a vehicle and you're using it for personal use. You need to know how you're going to differentiate how or what uses were for businesses and which ones were for personal use. Okay, but you're going to deduct all these expenses for vehicles that you use specifically for business. Now, we also have startup costs. Let's say that you're starting a business in the first year and you incurred certain costs, maybe getting licensing or whatever other expenses that you incurred. Remember, it is tax deductible. Now, we also have employee pay. So you have workers that are working for you full time, or maybe once in a while cleaners, you know, you can pay them wages and salary. So this category of expense is also allowable. You can deduct it. We also have continuous training or educational expenses. Let's say there are certain courses that you're paying just to make sure you get a skill and you remain relevant in your field. So let's say you bought some online courses, or you are attending some short courses that you're doing, or you attended some webinars or some seminars. So the cost of that, you can deduct it here, all right? Or maybe you attended some CPDs. You can deduct all those expenses here. Another expense that you can deduct is the rent for your office. All right, that is obvious. And then if you have a home office and it is dedicated, a special office, home office dedicated for your business, you can also be able to deduct that. And the next one is interest. You have taken a loan, a business loan, and you're servicing that. Now, the interest that you pay, the yearly interest that you pay on that loan is also deductible. Now, another one is advance tax or installment taxes or withholding taxes. So these taxes that you pay in course of doing your business, you're also supposed to deduct them. Now the next one is insurance premiums. You have insurance either for your workforce, or you've insured certain properties. You have insurance against bad debtors, you have just general insurance. So the premiums that you pay on that insurance is deductible. So remember that. So we also have advertising expenses. You market yourself, maybe online, physically, TV, radio, wherever. So that cost or that expense is deductible. All right. Now we have bad debts. You did work for certain people. You followed up with them 1 year, 2 years, they have refused to pay you. Now you can decide to write that invoice off, okay? And once you write it off, then it becomes a bad debt, and you can always claim that or deduct that to reduce your taxes. Another one is club dues and membership fees. As a professional, you belong to different institutional bodies. Whether if you're a lawyer, you belong to LSK. If you're an accountant, you belong to ISPACT. If you're an environmental person, a surveyor, whatever. So the fees that you pay to these institutions is tax deductible. Now, another one is donations to charitable organizations or NGOs, or to public causes or social good. So those donations are also allowable against your taxes, so you can use them to deduct your taxes. Another one is internet related expenses. You buy data to do business, you have to pay for internet, you have to pay for a website that you're hosting. You generally internet or computer or IT related expenses, you can deduct all of them against your taxes. Now the other one is the legal and professional fees. Let's say you had an accountant like me or a lawyer, and you paid them certain fees. Now these things or these expenses, you can deduct them from your incomes. Another one is utilities. You have power in your office, telephone, water, sewerage, general utilities. All these are tax deductible. Now we also have supplies and materials. You can consider these as consumables. You buy printing papers, you buy books, the instruments that you use in the day-to-day running of your business, so you can deduct them. Now I need you to differentiate something here. These things need to be consumables. For instance, you cannot use a printer and deduct it as an expense. A printer is an asset. It's not a consumable. It's not a material or consumable supplies. So you need to distinguish what can you deduct and what you cannot. But in this case, I want you to restrict yourself from you restrict yourself to consumables. All right, you differentiate what is an asset and what is an expense. Same thing applies to things like computers. Is your laptop an expense or an asset? It's an asset. But your mouse, your computer mouse, is it an asset or a consumable? It's a consumable. I mean, it's something that get replaceable in a short time. And the next one is depreciation, or what we call wear and tear. You know, you can depreciate your furniture, your computer, your vehicle, the equipment that you're using, the software that you're using, you know, so you can depreciate that. So the software that you buy, again, that is an asset. It's not an expense. You cannot write it off in 1 year. Okay, so you have to spread it in several years and write it off through what we call depreciation. All right, now, very nice. That is it about the expenses that are allowed, and these are expenses is what helps you in determining what profit you're gonna make. And these are these expenses that I've outlined here for you, and you can deduct them to arrive at the taxable income or your profits. And once you get your profits to be this one, you can now be able to charge this to tax, and you see the tax that you're supposed to pay. All right, now there are certain expenses that you cannot deduct, and we are gonna look into these expenses and see which ones are they. And the first one on the list is contributions to political parties. You like your political party, yeah, but the deduction to that party or the contribution to that party, you cannot deduct it. And the other expense is lobbying expenses. You know, you are trying to move an agenda, and you're sending some tokens to movers of that agenda. Maybe you're giving something to MPs or legislators or influential people, and you're trying to influence a certain legislation. So the cost of trying to influence anything, these costs are not allowed as deductions against your income. Another thing that you cannot deduct, and consultants fall into this so much, is a personal expense. All right, you bought yourself a nice thing, or you took yourself to holiday, and you want to deduct these things against your business. You cannot do that. Those are personal expenses. Or you just did a shopping, just went to Carrefour, shop things, and you want to bring that receipt to your business. Those are personal expenses, not allowed. The other one is clothing for work. You bought clothing for work. You are required to wear suits throughout whenever you're going to work for your client. Now that cost, the suits are expensive, yes, but that cost is not allowed. And the last one but not least is illegal activity cost. You bribed someone, or you gave kickbacks to get a certain tender, or to be given that work. You cannot deduct that. I mean, I know you know that, but you can't. Or maybe you had a criminal case and you paid some fines. You cannot deduct that. Maybe you had sexual harassment cases, you know, you cannot deduct such fines against your incomes. And that makes the end of our presentation. If you need our services, we offer specially designed package for consultants and professionals, and I'll be very happy to work with you to understand what you do and to be able to advise you on how you can maximize on your expenses and how you can be able to pay the least taxes the legal way. Do you have a question for me? Keep it in the comment section. I'll be responding. Till next time, see you, my friend. Joseph out.